Welcome back, Momentous Building family. Today we're going to talk about the housing and loan market in May of 2023. We got some real interesting facts and figures to kind of give you guys an update what the landscape is looking like right now. Alright, so let's dive right in. So as of today, this week, we're seeing a 12.5% increase in FHA loans year over year and a 12.5% increase in VA loans year over year. Now, overall mortgage applications are down, and the overall purchase price of mortgage applications are down year over year. No surprise. But what is really interesting is the actual increase in FHA loans and VA loans. Now, what's more interesting is that when you do a Google search trend, we actually see that the top 10 most affordable states in the country also have the largest search trends for FHA and VA loans. Now, what this leads us to believe is that people are really starting to get interested in moving to these more affordable states, and first home buyers are purchasing in this area more often. Also, we're guessing is that because of the FHA loans are up, housing is starting to stay on the market a little bit more, which we'll dive into a little bit more. FHA loans and VA loans have less competition from cash buyers. They are allowing that time to close where a seller might just want all cash because there were so many options. So this is giving VA and FHA loans a good fair ground to stand on, giving first home buyers a really good option to go forward and get in that new home. Other note is that refinances are down 30% year over year. No surprise, as interest rates are much higher at 2.5–3%. It's going to affect the refinance market. So let's dive right into interest rates. Interest rates right now are sitting at about 6.69% as of the last week of May of 2023. It's approaching the highest end spectrum what we saw back in March, which almost topped 7% as a national average. But the interesting thing is that our prediction is that this is actually going to go a little bit higher, and it's going to stay higher for a little bit of time as we are expecting another Fed increase in the rate hikes. Now, as we all know, mortgage rates aren't directly correlated to the federal interest rate, but indirectly they do get affected. Secondarily, as inflation and all these items keep increasing as we are seeing, we don't see any decreasing in these federal fund rate or the interest rates of mortgages anytime soon this year. Maybe at the end of the year they'll start going down. We'll have to see. Because interest rates are up so much, we're actually seeing, as of today in May 2023, for a seasonally adjusted average, mortgage applications are down 4.6%, which seems small, but as the overall numbers, it's quite a large quantity. Let's dive into the housing market now and see how that's doing. The housing market right now is definitely cooling off as we are seeing some areas decrease in prices while others are still appreciating, mostly in the tertiary states in all 4 regions of the country. But what is really interesting and is surprising is the increase or the steady demand in the Northeast for housing, but most of all in the lower tertiary areas. Now, the more expensive areas like New York City and some of the bigger metros, they are still seeing a slight decrease and less appreciation as compared to a city like a Rochester, New York. Overall, housing is staying on the market a little bit longer than it was last year. Right now, we are up around 9 to 18 days across the 4 regions, depending on which region you're in. However, we're still about 20 to 30 days shorter on the market on average when compared to pre-pandemic levels. Pre-pandemic levels, if we look back to 2019, houses were on the market for about 60 to 65 days. Even further back to 17-18, now we're pushing 75 days. Housing is on the market for about 49 days as of April of 2023. What we're seeing is that the extreme buying and houses going on the market for a couple days and coming right off, and multiple cash offers and all these different things, it's definitely starting to slow down, but it is still very popular, and housing is definitely moving despite the massive increase in interest rates. Now, the one thing we should look at, although it is not a May 2023 update, but it is a startling fact that we found during our research, is that the average home sold in Q1 of 2023 compared to Q4 of 2022 is down $42,000. What does that mean? That means that people are still buying, but they're buying homes that are substantially less, and this is going to be a direct relation to interest rates as we saw them peak in March. I think that once we see that data in Q2 of 2023 that'll be coming out in the coming months, we're going to see another massive drop in home prices, because people don't buy for the purchase price of the property, they buy for the monthly payment. So as payments have skyrocketed due to these interest rate changes, we're expecting another, it might be $50,000 decrease. As we can still see, homes are still in high demand and they're definitely moving in and out of the market. So guys, I really hope you like this video. A lot of fun information here. Quick update just to kind of, touch base of where we're at in May 23, see some of that data. Overall, what we're thinking is that housing is definitely moving. It is slowed a little bit, but due to the shortage of home supply in America, we are still seeing a massive drive for people to want to get into a house, and houses are moving on and off the market. And as well as new construction purchases are up as well. That is one fact that we didn't touch on. So really interesting dynamic of what we're seeing. And I think we're going to see a lot more play out in June, July, and August after we get through this summer buying season that is notorious to be the most popular season to buy houses in America. Anyway guys, I hope you really enjoyed this one. This is Patrick Robertson at Momentous Building, and we will catch you guys on the next one.